Welcome back, Alpha Hunters. The markets are closed for the week of November the 1st. That is right. We are now into November, 2 more months, and we will be into 2025. So we had a nice week this week. It's pretty good price action, mostly there on Thursday. We had a nice little gap up to start the week there on Monday. 0.6% of a gap up, you can see. Just kind of steadily came back middle part of the day and just kind of flat there the second half of the day. So that's kind of how Monday was. We had plenty of earnings throughout the week. I'm not going to go through all the details, but we did have earnings Tuesday, Wednesday, and Thursday after the bell. Those were all the big days. We did have earnings even Monday after the bell, but we did have a little bit of a gap down there to start Tuesday. Basically traded higher all the way up until the last 30 minutes of the trading day there on Tuesday. And then nice little drop there. Wednesday, a little bit of a flat open, a little bit of a gap. Not a big issue kind of going on here. Quick little sell down there to start. Nice bounce as we went into the middle of the morning, kind of early midday. And then just steadily gave it back all the way to close there on the day. Thursday, you see it. Huge gap down. This is when we got Microsoft and Meta earnings, and they just dropped. It's not really too much to say there. So yeah, nice little drop there the first hour and a half. Even tried to base out here for a little bit. Nice little rollover into the afternoon. Tried to bounce again, and nice little drop there the last 15 minutes. Nice gap up here Friday, going into Friday. Nice run for the first hour, and that was basically it. That was basically the high of the day there on Friday. Nice little pullback, and just kind of steadily gave it back choppy there throughout the rest of the day. As for some of the bigger economic data that we got throughout the week, JOLTS job openings came in at 7.4 million. Forecast was expecting about 8 million, which would have been an increase from prior at 7.86 million. So yeah, not exactly great jobs. A JOLTS number there Tuesday, but it did come down quite a bit. We did get various other things throughout the week. One of those other things that we did get was PCE core came in at 2.7, which was in line with prior, but the forecast was expecting 2.6. PCE top line came in at 2.1, which was in line with forecast at 2.1. Prior was 2.3, so it did drop as expected. Friday, we did get the ever so important non-farm payroll and unemployment rate. Non-farm payroll came in at 12K. Oof, that is brutal. Forecast was expecting 113K. Prior was 223K. Now, one of the things that we were talking about on the live stream early Friday morning was maybe there was some front loading into the October numbers, right? Because we had that huge beat, and then this month, November, we had a huge miss. So maybe there's some front loading there in October. It's just kind of weird back-to-back months that, you know, if you kind of averaged them out along with forecasts, they're kind of much more in line. Anyways, unemployment rate stayed basically flat, 4.1% for prior forecast, and the actual came in at that as well. So real quick, talk about earnings. Tuesday after the bell, we had AMD and Alphabet Google. Those were the two big ones there Tuesday after the bell. They basically both split, right? If you paid attention during the week, Alphabet did good, AMD did bad. So that's why we don't really have a strong directional day there Wednesday. Then we got Microsoft and Meta after the bell Wednesday. They both dropped, which is why the market dropped. They both led the market in the lower direction. Thursday after the bell, we had Amazon and Apple, and they both kind of split. Apple dropped. Amazon did very well. A little bit more of a positive day there, mostly because Amazon did pretty well, and probably a little bit of a bounce back there from Thursday. All right, let's take a look at sector rotation for the week. Communications in absolute domination mode for the week. Best performing sector there on the week. Financials, and another thing to kind of note, all the other sectors are actually negative on the week. Financials still outperform there. Discretionaries, healthcare, materials, industrials, and staples barely outperforming there on the week. Energy's a little bit of an underperformance. Looks like they mostly just kind of gave it back there big time on Friday. You can see that they actually started out the day pretty well and just gave it back all day there on Friday. Utilities, tech, real estate, the biggest underperformers on the week. Real estate makes a lot of sense. Yields continue to do very well for this week. All right, VIX is at a very interesting spot. We do have somewhat of some kind of line here around 23 level or so, and we've gotten higher lows to kind of come in over the past 2 months, 2.5 months. So it's a very interesting spot here. We did get a nice little bounce there Wednesday, Thursday, and a little bit of a retest. So probably my expectation, I think, going into the day on Friday was probably seeing a little bit of a rest, pullback here on the VIX. Still going to be in a whole lot of earnings, so probably just see this kind of consolidate here. And if we break through this 23 level, expect a pretty quick run. Maybe even kind of like what we did back on August 2nd, August 2nd, August 5th, something like that. Get through there, maybe see a quick run to 30 or something like that. So yeah, you maybe try to put in some kind of alert here at 24 possibly, and try to see if maybe you can hop on some VIX calls maybe real quick. The other thing to kind of know for this next week is we will have the U.S. presidential elections. So Monday, Tuesday, Wednesday, definitely might be some squirreliness going on. DXY dollar index basically pulled back throughout the whole week, even though for the first half of basically every day it was looking stronger, then wound up fading every day in the afternoon. Then you can see Friday basically reverse that nice little bounce there throughout the rest of the day, closing pretty high, basically closing flat for the week compared to last Friday. It was about where we closed last Friday. So even though it was a little bit of a volatile week as far as the highs and lows and moving around, basically just closed right back to where we closed at last week. GLD Gold Trust moved very well, bullish Monday, Tuesday, Wednesday, Thursday, Friday. Nice little pullback. I think right now you're probably just waiting, see a little bit better consolidation here on gold. Maybe pulls a little bit lower. Makes sense to me. 10-year yield. Look at the move that we got on Friday. Woo, that is solid. That is some nice consolidation. Pretty choppy consolidation. Quick little snap down there on Friday morning when we got jobs numbers, and it just game busters. This is the biggest issue. This is a huge issue, right? We're getting basically some jobs, economic types, data points that say yield should be going lower, and then they're just like game busters higher. And it's been like that for the past month and a half. So, and this is definitely something you don't want to see, as if you're potentially going into a slowdown, as is basically telling you you're gonna have to issue more debt to cover any kind of capital you want to raise, right? The higher the yields go, the more debt you got to issue. So if you're trying to also pay off debt that you've issued before in history, but now you got to pay it off on top of any kind of new issuance you want, that means there's more debt that's got to come out. So could just be a domino effect going forward. 10 and 2 inversion. Didn't really do too much. Nice little drop there on Wednesday. Nice, pop there on Friday, end off the week. Yeah, I mean, it's still staying above the zero line. I'll just be more cautious on anything if it gets below the zero line. See what that might tell us. But I mean, other than that, should just be moving above the zero line. And the 10 and 1 solidly moved through the zero line, so it's now uninverted on the 10 and 1 yield curve. So there you go. You can see a very solid move above it. And now we have, I believe this is all the yield curves. I believe this is the last one. So I would be a little cautious maybe on equities, because usually a couple weeks after you maybe get the last one to cross, and you start to potentially get some major bearishness. As far as some of these bond prices go, well, we had somewhat of a retest into the moving averages, kind of like how we did last week. That's kind of what we continue to do the beginning part of this week. We tried to break out there on Wednesday through the downtrend, but it didn't hold, came right down and just followed through Thursday, Friday. And with the way yields look, how we just saw them, it just doesn't look good. Doesn't look good for bond prices. So yeah, yields continue to push higher. Bonds prices are going to continue to push lower. The thing here about the HYG is you're basically getting into a spot of this previous high back in July, these lows, and that 100 moving average. So you're probably going to be a little bit more neutral here. See how something sets up going forward on the HYG. LQD, nice little breakdown here as well on Friday. Had that quick snappy retest Tuesday, Wednesday. But yeah, just kind of rolled over. I was wanting to see a little bit more of a multi-day, kind of like how the HYG had multi-day, kind of mix in with the moving averages as the rolls over. But LQD didn't really do that. Just a very quick snapback retest over a day and a morning, really, and just dropped off. So I think you're probably just going to let it run and look for probably something later on. Same kind of deal here for the TLT as well, though. Yeah, I mean, we had a pretty good snapback there from Tuesday to Wednesday, and then you can see a huge drop off there on Friday. So, yeah, I don't know. I was wanting to see a little bit better of a retest higher, kind of a multi-day mix-in, kind of rounded top, kind of like how we saw there on the HYG. And maybe we'll get that sometime here in November, but, yields have moved pretty far over the month of October. I'd be willing to wait on some kind of much more decent retest higher if you're interested in playing these bearish. All right, taking a look at the RSP. I believe at the end of last week, kind of talked about the possibility of a basing pattern here and moving higher. Well, we kind of continued that basing pattern there Monday, Tuesday, but man, that gap down on Wednesday drew a lot of concern from me on the live stream Wednesday. Kind of mentioned if we rolled back down towards the lows there on Wednesday, I would probably just be willing to play that just bearish. Play that bearish, and then pretty much sure thing right away on Thursday. Gap down, just traded lower. Initially, you saw the day and what it looked like. So right now, I would be looking for probably some good consolidation. This doesn't look good. This Thursday-Friday combo doesn't look good. We did bounce pretty good there on Friday morning, but we rolled right back down to the lows that we had on Thursday. We very easily continue lower. And you know what? It wouldn't be a bad play if you wanted to do that, but you're probably looking for these highs maybe, which would probably be mixing in with that 100 moving average as well, probably around that 173, 172 zone. Other than that, I want to see like a little bit more of a multi-day setup before I'd be willing to take that bearish. I mean, this is a pretty good. I wouldn't be surprised if we continue lower this next week. This is the breakdown of whatever support level we had here on 178. Broke that down Thursday. We got the quick snapback retest there on Friday. Wouldn't be surprised if we just continue lower. The DIA, very much similar, but not as bad, right? We got that pretty good gap down. We didn't sell off as much intraday there on Thursday, but we did snap back pretty good there on Friday. Even closed the day quite a bit more positive. But we do have this huge upper wick there to kind of start out the month of November right into the 10 and 20. Not going to be surprised if maybe we consolidate here, maybe another couple days and just roll over either. The IWM. This is probably the one I'm probably a little bit more optimistic on. Not saying that this couldn't break down. I don't really kind of want to play this right now. This is the one that's been less bullish here over the past 2 years compared to like the Qs by RSP and the DIA, right? This is not back up to its all-time highs that were put in back in 22. So I would just probably keep my trade short here. Not bearish short. I'm just saying short term. You get like a good price level to take it bullish, but be willing to cut it and have your little wins for now until we can get some clear breakouts and clear retests of some breakout levels. I'm good. I would want to have things that are a little bit more look better, cleaner, more predictable, and that kind of stuff. Right now, very choppy and a very steady uptrend, but it is very choppy. The Qs. Yep, we know, man. We got this lower high over the quarters. We did not get up there. We did not break those highs back from July. And we got that pretty good breakdown there on Thursday. Nice little retest in the moving averages, 1020 coming down there on Friday. Inside day upper wick. That does not bode well going forward. So if we break Thursday down, I'd be looking for the continuation breakdown. Now, the thing that I would say is since we did not have the best past couple of months here on the Qs, we don't have much separation here between the 50 and the 100 moving average here on the Qs. So I would be probably keeping an eye on the SPY as well. If the SPY and Qs both break down, make sure the SPY is definitely going, and make sure the Qs is dropping at a faster pace and gets through this 100 moving average. If that happens, it gets through that 100 moving average, I think you're probably just playing for it down to that 200 moving average, right? That's the bigger air pocket here that I think you're probably looking to capture on the Qs. And if that happens, then we could probably talk about maybe just starting to set up some outright bearish scenarios and bearish trades on the general market. But until that kind of scenario possibly happens, I think you're probably just keeping things small, protective. Even if you're playing things bearish on, I don't think you're going game busters with it in any way. And speaking of the SPY, we have this little bit of a bigger pocket here between the 50 and the 100, and that's kind of what I was talking about. If both of those break down, you want to make sure the Qs is going faster and getting through its 100 moving average, so you can capture that entire move, maybe possibly down to that 200 moving average. Now, the thing that I'm going to say about watching the SPY with that, if the SPY gets to its 100 moving average and the Qs is maybe floating here around the 470 level or something like that, or halfway between the 100 and 200, if you're playing it bearish, I would back off the Qs. Maybe don't take all of it off, but I would take a pretty decent portion off, because the SPY could very easily bounce the market off that 100 moving average. So just make sure you're keeping an eye on that. Anyways, as far as how things are going, I think we had a pretty significant breakdown there on Thursday. And if we get the follow through maybe this next week, it's going to be a pretty volatile week. We got a lot of earnings. We got presidential election results that are going to be happening early this next week. So other than that, have a great weekend. Make sure you go vote. Alrighty, take care, Alpha Hunters.